Hey, what is going on, guys? It's your boy Nick, and in today's video we're going to be talking about why exactly I'm currently buying Amazon stock and why I think it's undervalued at today's prices. As I would hope we all know by now, Amazon is the $1.5 trillion tech giant that has basically revolutionized the way we shop through the invention of e-commerce. In fact, Amazon's been destroying their competition to the point where they've achieved a staggering US retail e-commerce market share of 39%, whereas the closest competitor is Shopify with only 9%. But of course, Amazon is a much larger and more diverse business than many people think it is. Specifically, Amazon's created the world's largest cloud computing platform known as Amazon Web Services, or AWS. They've developed the well-known Prime Video and music streaming services, and they've acquired countless successful businesses over the years, such as Whole Foods, Audible, Twitch, and many more. Overall, there are many reasons why I've been extremely bullish on Amazon over the years. However, it hasn't been until recently that I've actually found it to be quite an attractive buying opportunity. So in this video, I will be explaining my 3 reasons for buying Amazon stock, the price points that I already bought in at, and where I think the stock is headed in the future by doing a discounted cash flow analysis, because I think there's a huge opportunity in Amazon right now. So if you do enjoy this video, make sure to drop a like to help support the video, and if you haven't already, definitely consider subscribing for more investing content in the near future. But with that said, let's jump right into the video. Alright, so over the past few weeks, we've been seeing a little bit of a market sell-off as investors choose to rotate their money from the technology companies and the pandemic prosperous stocks over to the economic recovery stocks. Now, in my opinion, this market sell-off was overdone for several companies, including Amazon. So I ended up taking advantage of this opportunity by first buying a share at $3,200 US, and then a second share at $29.50 as the stock continued to plummet. And this created my total current position of just over $6,000 US at an average cost of $3,075 US. At the current time, Amazon does now represent the second largest holding in my portfolio out of all of the stocks that I own, so I am pretty bullish on it, and I would continue to buy if this stock drops even further. It's just very difficult to dollar cost average down on Amazon without buying fractional shares, if you know what I mean. But anyways, let's jump into my 3 reasons for buying Amazon stock right now. Alright, so the first reason that I bought Amazon stock is for the global e-commerce trends that we're seeing and the accelerated shift to online produced by the pandemic. By taking a look at the industry trends for which Amazon generates the majority of its revenue, we will be able to tell if Amazon will keep rising its revenues over time. So as we can see from this chart, from 2010 through 2019, US e-commerce sales growth hovered around 15% per year, which is very healthy and good growth, but nothing compared to what happened in 2020. As a result of the pandemic, this growth was accelerated to a staggering 32.4% in 2020, which over doubled the normal annual growth of e-commerce per year. Additionally, total retail sales growth in 2020 was only 6.9%, showing that there is a continued shift to online e-commerce rather than the typical brick and mortar retail. So clearly we're seeing that the pandemic drove a huge acceleration to e-commerce sales growth worldwide and basically moved the industry forward 2 years within a single year. As for 2021, however, the US e-commerce sales growth rate is supposed to decelerate down to 6.1% as the brick and mortar businesses rebound from the pandemic. And for this reason, we did see that large sell-off among technology companies in the early new year as the economy began to normalize and things started to go back to the way they were. But let's be very clear, the growth that we're seeing in 2021 of 6.1% is still very healthy growth, and especially despite having such an amazing year of 32.4% growth in 2020. Then as we look forward into future years past 2021, we can see that e-commerce growth is supposed to accelerate back up, basically to previous levels. So in 2022, it's supposed to be at 13%, 12.6% in 2023, and then 12.3% in 2024. Therefore, the jump from $791 billion of e-commerce sales that we had in 2020 to $1.21 trillion that we're expected to have in 2024 would represent a growth rate of 52% over 4 years, which is very great. So as we can see, this is very common investor behavior, always looking for the next momentum trend to buy into to make some short-term gains very fast, whereas we can see that Amazon and other tech companies are going to be doing very well over the next few years. But now let's take a much more detailed look at Amazon itself, and specifically their most recent earnings report and some of the very important takeaways that I've gathered. So Amazon recently announced their Q4 2020 and full year 2020 results on February 2nd, and needless to say, because of the pandemic, they had their best quarter ever. In fact, Amazon reported its first $100 billion quarter, with total revenues coming in at $125.5 billion, beating analyst consensus of $119.7 billion. Then for earnings per share, the company reported $14.09 versus the $7.23 projected by analysts, which represents a beat of 95%, which is absolutely incredible. When you find a company beating their earnings estimates by about 20 to 30%, that's honestly considered a pretty great quarter, but Amazon just blew this one out of the park. And what's actually so important about this quarter's results, along with the full year of 2020, is that we're beginning to see Amazon's profits absolutely explode. To show you what I mean, let's take a look at the sales growth of the quarter and then compare that to the net income growth. So the net sales for Q4 2020 were up 44% year over year, while over the same period we find that the net income grew 121% year over year, so nearly triple the sales growth. So basically, through all of the innovation, the customer first focus, and all of the capital investment into this business, Amazon is now reaping the rewards in terms of profitability. Now, another very important takeaway from this earnings report was the outstanding advertising growth that Amazon saw in the quarter. This article by Market Dive says Amazon's advertising revenue grew 64% to $7.95 billion in the fourth quarter from a year earlier, a total that surpassed subscription services, which includes Amazon Prime, for the first time and grew at a higher rate than any other segment. So guys, this is huge news, and it shows that Amazon is still able to continue to grow its revenues very quickly as such a large company. And in my opinion, advertising is going to be one of the largest growth drivers for Amazon over the coming years. As we've seen, the transition to e-commerce and online penetration overall has just been accelerated by the pandemic, and online advertising is no exception to this. In fact, taking a look at this chart for all US advertising in 2020 shows that online advertising spend was around $120 billion, while in 2024 it is expected to be over $150 billion, which is a healthy 25% increase over this 4-year period. But what's even more important is Amazon's ability to penetrate into the existing advertising market. Companies like Facebook and Google are clearly the leaders in this industry and are basically operating in a duopoly, but Amazon is in third place behind them and is growing very quickly, meaning that Amazon has a large opportunity for stealing market share within this industry over the coming years. Finally, guys, a huge bomb was actually dropped in this earnings report, and I want to discuss it because it is very important regarding Amazon stock. And this was the fact that Jeff Bezos is leaving as CEO and he will be transitioning into the role of executive chair. And then Andy Jassy is going to be taking over for him as CEO. Now, I personally believe this news actually shocked the market, and it was a contributing factor to why the stock sold off after this earnings report was released. Like, with the earnings that Amazon produced basically beating analyst consensus by double, and then the revenue being even higher and the stock sells off, there's gotta be a bigger reason for that. Because someone's investment thesis could have been betting on the fact that Jeff Bezos was going to remain as CEO for the next 5 years, and now that he isn't, that could be a reason to sell the stock. But as for myself, this does not concern me in the slightest. I actually think it could provide a better buying opportunity for the long term. If Jeff Bezos wasn't confident that Andy Jassy couldn't handle the role or didn't have the forward-looking mindset like Jeff, or even the innovation mindset, then he would not have promoted him. Furthermore, Jeff Bezos even said in the quarterly report that right now he sees Amazon being at its most inventive ever, making it an optimal time for the transition. So I believe the CEO transition should be welcomed by investors, as it should have been when Tim Cook took over for Steve Jobs, and we all know how that turned out. All right, so the third and final reason why I purchased Amazon stock and will potentially be buying more is because I believe it is extremely undervalued right now. So as we can see from the stock chart, Amazon has always been one of those high growth companies showing very impressive returns over the past decade. And it's been able to produce those returns despite always trading at a very high valuation. For instance, over the past 5 years, Amazon has traded above a PE ratio of 80, and most of the time it was actually far above a PE ratio of 100. But recently we're finding that the company's trading at a more reasonable valuation, with its current PE ratio at around 75 and its forward PE PE ratio at around 45. This is because over the past 6 months, the stock has actually been basically flat and actually down for all of the reasons that I've mentioned in this video, despite the revenues and earnings going up. Now, looking forward, analysts are expecting Amazon to have revenue growth around 22.8% in 2021 and then 17.6% in 2022. But take a look at this, guys. Analysts are also expecting Amazon to only grow their earnings at about 14% over this year and then 38% per year over the next 5 years, which is absolutely ludicrous for such a large company. So I would bet that a lot of investors are taking a look at this 14% EPS growth in 2021 and saying, well, why would I hold Amazon if so many other companies are going to be growing faster than this? But in my opinion, right now is the best time to get in before we see a lot of that share price appreciation over the next 5 years, when profits are going to explode up to 38% per year over the next 5 years. All right, now for the fun part. I'm going to be calculating the future earnings per share of Amazon based on these analyst estimates, and I'll be showing you exactly why they're so undervalued right now. All right, so we know analysts are expecting Amazon to grow its 2021 EPS at a rate of 14%, and then over the next 5 years, they're expecting it to grow at around 38%. However, I'm being conservative and I'm estimating they're only going to grow at 35%. And we also know that in 2020, Amazon had earnings per share of $41.83. So to be able to calculate the 2021 projected earnings, we can use that 14% earnings growth rate that analysts have expected. And then for 2022 all the way to 2026, we can use that 35% growth rate that I'm assuming. Therefore, in 2026, I would be expecting Amazon to be producing around $214 of earnings per share. Now let's assume that Amazon has a current share price of $3,200, which would translate to a current PE ratio of 76.5 based on these 2020 earnings. But of course, as the company continues to grow, it's not going to be able to maintain those same earnings growth rates in the future, simply because Amazon is already such a huge company. So I'm assuming that in 2026, Amazon's PE ratio is going to collapse down to about 35, which I think is a realistic scenario. So therefore, we can calculate Amazon's 2026 share price by multiplying the PE ratio of 35 by the 2026 earnings per share of $213.83 to get a future share price of about $7,500. Finally, as we can see over that 5-year period, the total investment return would end up being 134%, or an annualized compounded return of 15% per year. Now, to be completely honest, I think these estimates are rather conservative, and here's why. Over the past 5 years, Amazon's been able to grow their EPS at 100% per year. Yes, you heard that correctly. And now analysts seem to think that it's going to drop down to 38% per year over the next 5 years. We'll see, but I think it's doubtful considering the fact that Amazon's been beating analyst estimates like crazy over the past several years. Now, if we go back and redo my calculations, assuming that the future 2026 PE ratio is going to be 40, this would actually bring their 2026 share price to $8,553. Then the total return over that 5-year period would end up being 167%, or an annual return of 18% per year compounded. So guys, either way you put it, I believe that Amazon is undervalued based on the conservative case and the bullish case over the next 5 years. And the stock should reward shareholders handsomely with a buy-in price below $3,200 and preferably closer to $3,000 per share. Finally, I did just want to mention that analysts have a current price target of $4,000 for Amazon over the next 12 months, meaning that buying in at $3,200 per share could represent upside of 25% if the stock does achieve $4,000 by the end of this year. And I really do think that is possible. Anyways, I hope this video could provide you with some value based on my bullish case on Amazon. And let me know down below in the comments section if you are also bullish on Amazon and why some other reasons you might be bullish. I would be really interested to know. But anyways, if you haven't already, make sure to drop a like on this video to help support my channel. And then subscribe if you haven't already, because I'm going to be uploading tons of more investing content coming soon, stock market investing specifically. So yeah, it's going to be really exciting. And with that said, I will see you guys in the next one.